business loan documentation. What do banks really want to see? I've had clients come to me in tears after being denied a business loan. And you know what the bank told them? Your financials aren't clear enough. They had the revenue, they had the business plan, but they didn't have their books in order. Today, I'm pulling back the curtain on exactly what banks want to see when you apply for a business loan. And I'm going to show you how to prepare these documents the right way so you don't waste months of your time. Hey everyone, I'm Bev. And as a bookkeeping coach who's helped hundreds of businesses secure financing, I can tell you that the difference between getting approved and getting denied often comes down to documentation. Not your business idea, not your passion, but cold, hard documentation. Here's what most business owners don't realize. Banks aren't trying to be difficult. They're trying to minimize risk. And the way they do that is by looking at very specific financial documents that tell them whether you can actually pay back that loan. In the next 10 minutes, I'm going to walk you through the 7 essential documents banks want to see, red flags that'll get you denied, and my insider tips for making your application stand out. So grab a notepad because we're going to go deep. And if you're serious about getting business financials loan ready, make sure to subscribe and hit the notification bell so you don't miss any of my practical bookkeeping tips. Let's start with what I call the big 3, because without these, you're not even getting past the first round of review. Number 1 is your profit and loss statement. Banks want to see at least 2 to 3 years of profit and loss statements, not summaries, not estimates, actual detailed profit and loss statements that show your revenue, cost of goods sold, and all your operating expenses. Here's what they're looking for: consistent revenue patterns, healthy profit margins, and controlled expenses. If your P&L looks like a roller coaster with massive swings month to month, that's a red flag. They want to see stability and growth trends. Pro tip from the bookkeeping side: make sure your categories are clean and professional. I've seen applications get questioned because someone had an expense category like stuff or random. Use standard accounting categories, and if you have any unusual expenses, be ready to explain them. Number 2 is your balance sheet. Your balance sheet shows your assets, liabilities, and equity at a specific point in time. Banks use this to calculate your debt to equity ratio and see if you have enough assets to cover potential losses. What they're really asking is, do you have skin in the game? If your business has 0 assets and you're asking for a $100,000 loan, that's going to be a tough sell. Make sure your balance sheet is reconciled properly. Every account should match your actual bank statements and records. I've seen loans delayed by months because the balance sheet didn't reconcile, and the bank couldn't trust the numbers. Number 3 is your cash flow statement. This is arguably the most important document, and it's the one most business owners neglect. Your cash flow statement shows the actual movement of cash in and out of your business. You can be profitable on paper, but still run out of cash, and banks know this. They want to see that you have positive operating cash flow and you manage your cash well. If you're constantly operating at 0 or negative cash flow, even if you're profitable, that's a huge red flag. Here's my bookkeeping coach tip. Start preparing these monthly, even if you're not applying for a loan yet. When you need them, you'll have clean historical data that's ready to go. Document number 4 is your business tax returns. Banks typically want 2 to 3 years of complete business tax returns, and I mean complete. All schedules, all pages, everything. Why do they want tax returns when you already provided financial statements? Because tax returns are verified by the IRS, and they want to make sure your financial statements match what you told the government. Here's where people trip up. If your P&L shows $100,000 in revenue, but your tax return shows $50,000, you better have a really good explanation. And no, I wanted to minimize taxes is not going to cut it. This is why I always tell my clients, don't get too aggressive with tax deductions if you're planning to apply for a loan. Yes, lower taxes are nice, but showing 0 profit for 3 straight years makes you look like a risk to lenders. And please, please have your tax returns professionally prepared. I've seen applications denied because of amateur tax prep mistakes, that made the business look disorganized. Now let's talk about something that surprises a lot of business owners: your personal financial documents. Document 5 is your personal tax returns. Yes, they want your personal tax returns too, typically 2 to 3 years. Why? Because for most small businesses, especially new ones, your personal creditworthiness matters. If you're asking for an SBA loan or any loan under $1 million, you're probably going to personally guarantee it anyway. Document 6 is your personal financial statement. This is a document that lists all your personal assets, liabilities, income, and expenses. Everything. Your house, your car, your retirement accounts, your credit card debt, your student loans. Banks want to see that you have personal financial stability. If you're drowning in personal debt, they're going to worry that you're prioritize paying your mortgage over paying back their loan. Here's my pro tip: clean up your personal finances before you apply. Pay down high credit card balances, don't make any major purchases, and definitely don't open new credit lines. Your credit score and debt to income ratio matter more than you think. Let's talk about document 7 and beyond, because there are several supporting documents that banks will absolutely request. Bank statements. They want to see 6 to 12 months of business bank statements, and they're going to scrutinize these. They're looking for consistent deposits that match your revenue claims. They're checking for overdrafts and NSF fees, and they're watching for any suspicious activities. Red flags here include frequent overdrafts, deposits that don't match your P&L, tons of cash transactions with no clear documentation, or commingling personal and business funds. If you're still using your personal account for business expenses, stop right now and open a dedicated business account. Accounts receivable and payable aging reports. If you've established business, banks want to see who owes you money and who you owe money to. They're checking if your customers actually pay you and if you're keeping up with your own obligations. If you have $50,000 in receivables, but most of it is over 90 days past due, that tells your bank your cash flow is at risk. Business licenses and legal documents. Have your business licenses, articles of incorporation, or LLC formation documents, business licenses, commercial leases, and any major contracts ready to go. Banks need to verify you're a legitimate, legally operating business. Your debt schedule. If you have existing business debt, create a clear schedule showing every loan, the balance, the payment amount, and the maturity date. Banks need to know what other obligations you have. Now, beyond the financial documents, you need 2 more critical pieces: your business plan. I know. You might think business plans are outdated. They're not. Banks want to see that you've thought through your business model, your market, your competition, and your growth strategy. It doesn't have to be 50 pages, but it needs to be solid and realistic. What they're really looking for: do you understand your market? Do you have a clear path to profitability? Are your financial projections realistic or wildly optimistic? A use of funds statement. Be crystal clear about what you're using the loan for. Are you buying equipment, hiring staff, expanding to a new location, managing cash flow during a slow season? Vague statements like working capital aren't good enough. Break it down. Show them you've done your homework and know exactly what you need and why. And here's something most people don't do: show them how this loan will help you make more money. If you're borrowing $50,000 to buy equipment, show them how that equipment will increase production and revenue. Make the math work in your favor. Before we wrap up, let me give you my top insider tips. First, start preparing at least 6 months before you apply. Clean books take time to create, and you can't fake historical data. Second, consider getting a financial statement review or audit. Yes, it costs money, but it shows banks you're serious and that a professional has verified your numbers. Third, be honest about everything. If you've had a bad year, explain it. If you have tax liens or past financial issues, disclose them up front. Banks will find out anyway, and transparency builds trust. Fourth, work with a bookkeeper or accountant who has experience with business lending. We know what banks want to see and can help you present your information in the most favorable light. And finally, red flags to absolutely avoid: inconsistent information across documents, obvious errors or typos, missing months in your financial statements, no separation between personal and business finances, and recent large unexplained transactions. Banks look at hundreds of applications. Don't give them an easy reason to say no. Getting a business loan isn't about luck, it's about preparation. When you have your documentation organized, accurate, and professionally presented, you're telling the bank that you're a serious business owner who manages their finances responsibly. If you found this helpful, smash that like button and subscribe for more practical bookkeeping and business finance tips. Drop a comment below and tell me, are you planning to apply for a business loan this year? What's your biggest concern? And if you want help getting your books loan ready, check out my bookkeeping coaching program, linked in the description below. Thanks for watching, and remember, clean books equal more opportunities. I'll see you in the next video.